Welcome, Benzinga Nation. Today I've got a special guest with me. His name is Ross Givens. And now Ross is a former money manager and also the vice president at JP Morgan Chase. But we're not here to talk about the traditional investment methods because since 2017, he's been using a different approach, right? He tracks insider trading activities to find stocks that are likely to make the bigger moves. And from what I understand from the notes that have been given, it seems to be working, right? The trading alert service, which is called Insider Effect, hasn't had a losing year. The compounded return over the last 6 years is approximately 2,000%, which is great to see as well. Now, the beautiful part about it is that in 2020, we all saw the bear market, but this strategy was still able to go ahead and turn a profit. Enough from me. Ross, welcome to the show, man. Looking forward to your insights.
Hey, man. Thanks for having me.
Now, insider trading, whenever someone hears that, they get kind of alerts like, whoa, illegal, SEC. But give me the big picture overview of what your trading strategy is so folks don't go running away.
Well, first of all, it is 100% legal. All right. The tips we're getting come from the SEC website. I don't think it gets any more legal than that. But insider trading is simply a term meaning trading by insiders. So anytime the CEO, the CFO, a board member, a vice president buys or sells their company stock, that is technically an insider trade. Now, insider trading is a bad name for when it's done illegally, meaning trading on material, non-public information. So you're a pharmaceutical company, you're about to get FDA approval, nobody knows it yet. You load up on the stock the night before the news and make a fortune, right? But that's insider trading at a gist. But what we're doing is analyzing all the trades by these insiders to look for these opportunities where it's just very obvious that they seem to know something. They're all buying totally out of the blue for the first time in years. So that's kind of what we're looking for without getting too specific.
Now, the SEC, I know, has guidelines, right? We've all kind of heard of like Nancy Pelosi, right? There's so much scrutiny that goes out there in that sense as well. But what you're looking for is not the scheduled buying and selling, say for tax purposes or something that was planned maybe 6 months ago. You're looking for like the unusual activity, if you will, when it comes to insiders buying.
Yeah, we're playing what is essentially a loophole. A few years back, and this used to be a big problem in the 80s and 90s, right? So the SEC, they passed a rule called the 10b5-1 rule. And essentially what that says is, listen, if you're an insider, as long as you've got a written plan for when you're going to buy, when you're going to sell, you're good. Report it. You're immune from insider trading violations. The problem is this rule is laughably vague. Okay, so this plan can be anything. They can even make it their own proprietary formula. They're even allowed to change the plan, to modify it throughout the year. So in a lot of ways, it is still kind of free-for-all when it comes to insider trading.
Now, when it comes to the insider trading aspect of it, are you just looking at like the CEO, or are you focused on a specific title within the organization because you feel like they might have more insights? Like give me a little bit of...
Yeah. Well, we're looking at the top brass. So generally when it comes to insiders, it's the CEO, the CFO, the directors or board members, various vice presidents, occasionally got the general counsel buying. And again, I'm just looking for what I call opportunistic buying. So as you mentioned, there are some routine schedules, tax loss, tax purposes, where, hey, look, the CEO put $1 million in the stock. It's like, well, he put $1 million in the stock at this time last year, and the year before, and the year before. That's routine. You're not getting any information there. But on the other hand, if you look, he's put $1 million in, you go back and like, well, he's been CEO for 6 years. He's never bought before. Seems odd. He's suddenly going in. And then you dig in and, well, around the last 2 weeks, the CFO bought too. And so did the vice president. And so did the general counsel. And so did 3 board members. And these guys rarely buy the stock, right? So when you see all of that, of course, it's no guarantee. But a lot of the times what's happening is they're trying to exploit some information they know that's going to boost that stock price and make them a lot of money.
Now, I know you've got a webinar around this strategy coming up, which I'll talk about here in just a moment, but give me 1 or 2 winners, but I also want to know a couple of losers as well, but we can start off with the good stuff.
Yeah, well, the one that comes to mind most recently, and we only put out 3 to 5 recommendations a month. We're not, day trading this stuff. There's only so many just juicy opportunities. But one we did in January was this little biotech company called Perspective Therapeutics. The ticker is CATX, CATX. And this thing was like 40 cents a share, right? Off the grid. Nobody's watching it. Well, as I mentioned, it's a biotech company, but we looked into it and they were like right near the end of some stage 2 clinical trials. And as you know, those things go good, boom, to the moon. They go bad, and it's not going to be a fun week. Well, suddenly we saw in a single week, 2 board members, the chief financial officer, the chief medical officer, all piling into this stock totally out of nowhere. They bought more stock in those 2 weeks than insiders at this company have bought in the last 20 years combined. So it just looked like they might know something. So we followed along. Literally, that's the extent of our research. And as expected, drug trials were good. The stock shot up. I think it went up 350%.
Nice.
Over the next 4 months.
That's a big win. But now tell me about the losers, because I'm sure they're not all home runs like that. So tell me about the
They're
bad.
not. You're right. There's look, any strategy is going to have some losers. But to be honest, we really have not seen any big losers. Now, not that some of them didn't. I mean, we're only risking usually about 15% on these. We're not cowboys with it. But when you think about it, the entire strategy really brings down your risk, because what we are doing is we're only picking from stocks that are seeing heavy insider buying. We're kind of fishing from a stocked pond. So, when you think about it, you've got the CEO, the president, the vice president, the board members, et cetera, all buying 6-7 figures apiece for the first time in years out of nowhere. What are the odds they're going to do that right before a terrible earnings report, right before some terrible piece of news? You know what I mean? So it's just rare. There are black swan events. There are bear markets that bring down everything. It's why we use stop losses. It's part of the game. But generally, our losers are just stocks that either don't go anywhere, meaning maybe the buying was just coincidental or some deal fell apart, or, market brings them down. They go down 5, 10, 15%. We just kind of cut them loose and move on. But it's lower risk than other things I've seen.
I was going to ask you 2 questions. One of them, I think I kind of answered myself while thinking about it, is why don't hedge funds do this, right? And I think the answer there, and you tell me if I'm wrong, is that there are small caps.
Bingo.
You buy a lot of money, or you buy a lot of shares with a lot of money, you're gonna kind of create some havoc from the SEC, and it may not be the best bang for your buck in dealing with them.
They'll move the price too.
Yeah,
Right?
you may not get the shares you want at the average price itself, but why doesn't everyone else do it?
Well, I wish they did. I do training events every couple of months to try to show people how to do this themselves. I call it the best kept secret on Wall Street, and I think it is. It's the biggest advantage people have. Most people aren't aware this loophole exists. They're not aware that insiders report these trades publicly, and they don't know where to find them. It's all free information. You can do it. So that's what we try to do. I hold these events. I've converted thousands of people to diehard insider traders, and we hope to convert thousands more to kind of level the playing field, because we know that at the top they always have an advantage, and we're trying to use that advantage for ourselves. We're letting them feed us inside tips, and we have one coming up. In fact, this week, it's Thursday, June 27th. It's about an hour long. It's online. It is 100% free, but it's Thursday the 27th, 3:00 p.m. Anyone can attend. It's online. The only catch is it caps at 1,000 attendees. So the software we use, it's as many. So just be sure to register early, show up for that, and I'll show you everything.
And as I was on the website trying to sign up itself, it talked about how you would actually send the report once you do go ahead and fill out the form, even if you missed it, because I'm sure we all have busy lives. But Ross, this was good, man. I appreciate your time.
Absolutely. I appreciate it. Hope to see you there on the 27th.
We will talk soon. And chat, if you're interested, don't forget, you can click the link in the description and also in the chat, which is www.insidertradingtruth.com to sign up for the free training from Ross. By the way, it is on Thursday, June 27th at 3 p.m. And as always, thank you for watching.